Hey everyone, it's Alan Brochstein from New Cannabis Ventures and 420 Investor. I hope you had a good week. The market, this is such a bad market that it was actually up this week, but it didn't feel like it. It rallied a whopping 0.4% as measured by the Global Cannabis Stock Index. Tomorrow's newsletter coming out of New Cannabis Ventures will have several different features in it. The first curated press release that we'll cover falls into the category of capital raising. And one of the big themes that I've been talking about at 420 Investor is how a lot of the Canadian LPs need to be recapitalized. And we're going to see a lot of consolidation in the industry as well. But a lot of companies are struggling with debt. The top of mind would be Hexo. This is really hanging over the market right now. But a company that's been doing very well in the premium flower and derivatives market is Decibel Cannabis. And I don't even follow the company that closely, but it has caught my attention recently because of its success actually in the Canadian market. But looking into it, it was really clear they had a huge debt problem. So this week they were able to solve their debt problem with more debt. They found a provider of debt, a credit union in Canada, to provide them with $54 million in capital. So this kind of erases the near-term potential problems there. So that was the first one on the capital raising. We also saw SPAC deal Leafly, which is supposed to merge with Merida Capital. Is that what they call it? Merida Merger is the name of it. Merida Capital, I don't know. But the Merida acquisition SPAC. And so it was crazy what happened this week. That stock, MCMJ, plunged. Now, there is no reason that I'm aware of for a SPAC to trade below that $10 price unless, I don't know what the reason is. So maybe I just don't understand SPACs enough, but if the deal didn't go through, people get their money back at $10. So in any event, the stock plunged, and then that night, Leafly announced a pipe deal, or actually a convertible note deal, totaling $30 million. And so I haven't really seen this. We've seen a lot of pipe deals on these new SPACs. And the problem, if you're not following the SPACs, there's the issue of redemptions. And so the people that buy the SPACs, they get units. The units are shares and warrants. And they'll just keep the warrants and turn back the shares if they don't want them. And so that's been a big problem because you think you have capital, but you really don't. So most of these cannabis SPACs have closed with a lot of redemptions. And so to obviate that, they'll go and they'll raise additional capital. And so in this case, it was done through a convertible note. So the merger will go through. Leafly will begin trading publicly soon. The other type of news that we ran this week was on earnings. And so the first one was not actual earnings, but it was a pre-announcement. And GrowGen, not a big shock that they didn't have a great Q4, but pretty big miss. They had been expected to have revenue, I think of 110 million off the top of my head. And now they're saying 88 to 90 for Q4. And on top of it, the adjusted EBITDA is going to be negative 2 million or so. So not a good quarter. This follows the pre-announcement from 2 weeks ago out of Hawthorne, which is owned by Scott's, and then also the follow-up from Hydrofarm. It's really clear that the year-over-year comparisons were really tough. So GrowGen was generating same-store sales growth of I think like 60 or 70%, something crazy like that. And this last quarter, it fell to negative 12%. The stock was already hammered, and it got hammered even more. The other two were scheduled releases, and both out of Canada. The first one alphabetically was Organogram, was actually the second one chronologically. And Organogram had a beat. Their revenue was above 30 million, and their adjusted EBITDA loss was close to $1 million. And the company accelerated their timeline to EBITDA break even from Q4 to Q3. So a pretty decent report. I know a lot of people are commenting that it doesn't really matter. They're not profitable. but the company sure seems to be making progress, something I've been discussing at 420 Investor. But I do understand that sentiment. I mean, if you're just grabbing market share by heavy discounting, you can't turn a profit on it, then it's just your turn in the game of whack-a-mole, I guess. But we'll see if it's sustainable or not. Definitely some traction there, but that was Organigram. Tilray, on the other hand, you may recall we wrote about it extensively last week, that we expected a pretty big miss, and we underestimated. It was worse than we expected. And they have 4 different units, and I don't really care about the pharmaceutical distribution. That's a lot of revenue, not a lot of growth, not a lot of profit. The other 3, one I really don't care about much either. Hemp food, not a high growth business. This is something Tilray acquired, Manitoba Harvest, years ago. Did not turn out to be a good acquisition. They did benefit a little bit initially from the pandemic, but so that one fell. It saw a year-over-year decline. And then their other business, the beer business, there's no year-over-year comparison because this was a recent acquisition, but it fell sequentially. Maybe there's some seasonals there. I'm a cannabis guy. I care most about the cannabis, and that's what I opined about based on the data I was seeing, and I expected a pretty big miss. I think I talked about maybe that it would be down 10 to 20% from Q1 to their fiscal Q2. Wrong. It was down 17. I'm sorry, the adult use being down that much. It was down 30%. So overall cannabis revenue fell sequentially 17%. Now, I spent some time, I think I published a video this week talking about kind of the games with their net income. It's not that they're doing anything wrong, it's just that they're not really telling the world the reality. So the accounting, it's true, they had positive EPS, as I discussed, but it is 100% or 1,000% actually based not on anything operational or anything like that. It has everything to do with their stock price falling. They have convertible notes and they have warrants, and when their stock price falls, these financial instruments become less valuable, and that means it's more valuable to the company because it's a liability. So a reduction in a liability is good for the company. It creates this phantom income. So, if the stock price goes up, then they're going to have a loss. I'm sure they won't hesitate to tell you about, well, the reason we had a loss was because of this. So I thought they did a really bad job of explaining that from my perspective. So overall cannabis sales fell sequentially 17%, adult use down 30%. They don't really provide good numbers from a year ago, but look, you can't sit here and brag about how you're growing. It's true their cannabis sales grew from a year ago, but they grew very modestly. This was Tilray plus Afria this year, and it was just Afria last year. Hey, there's 75% more shares today. On a per share basis, their revenue fell. So the point we were trying to make last week, so that people would understand, hopefully if you own that stock, you were able to at least think about selling into the pop after the rally, because it gave it all up. But that's for you to decide to do. That's not for us to call. So the exclusive news that we published this week, one of the types of news we run is reviews of data. And Michigan released data this week, and it was, like Illinois, very strong. Now, you have to, when you look at sequential data, you have to be careful. December had an extra day than the prior month, November. And so consequently, you're going to see typically a lift. Now, there's certain seasonals that we don't necessarily fully understand, but it was very strong data. You can read the piece. And the year-over-year growth there has stabilized. So we've seen declining sales rates, and I'm going to get back to that point in just a moment. So the Michigan piece was a small bit of positive news, and it seems like we got a lot of negative news last week. And it's the most recent news, right? December, data from December. Now, the other thing that we ran as an exclusive piece was just one interview this week. It was with the CEO of Valens, and Valens has closed a lot of acquisitions, and they also did a recent financing round. And Tyler, CEO, kind of talk through some of this and explain why he's really looking forward to, they're already in their fiscal year, to this current fiscal year. So that was the news that we provided links to. Also, in each newsletter on Sunday mornings, we share a little bit of insight. And so this week, we kind of rolled the clock back to a year ago when we started to see some signs of slowing cannabis growth. And that was November of 2020. And so remember, in the summer of 2020, sales were booming across multiple states. And as we discussed at the time, and as I'll say again, it was booming for a lot of reasons. Some of it was probably permanent. You know, the convenience factor. We had previously not had in many of these markets curbside pickup or delivery, and these were introduced and are still part of the market. And this makes legal cannabis more convenient, which helps gain market share in the overall market against the illicit market. So that was certainly a real tangible thing, but there were some transitory things as well. I always like to describe it as people had more disposable income. That's even before the subsidies, right? The stimulus payments. But people had a lot of money if they didn't lose their job, and they had time on their hands. They had no drug testing. I didn't put that in the piece. They had nowhere else to spend their money. They couldn't travel. They couldn't go to restaurants. Sporting events were closed. There was just very few places to spend money. So on entertainment and leisure. So consequently, that having money, having time, having no drug testing, having anxiety, all these things really helped boost the sales of cannabis in the summer. And so, you know, not surprisingly, we started to see a slowdown. And this was a major theme, I think, in 2021. Where throughout the year, and especially in the back half of the year, and if you really connect the dots, I think that the public companies were hurt by some of this slowing because in that less robust growth market, it was harder for them to meet their numbers. And so we had the problems of Illinois not adding their dispensaries as they were supposed to because of the legal delays. New Jersey didn't go legal as was expected. So there weren't a lot of good things happening. And so I think one of the big consequences was in some states like Pennsylvania, especially Massachusetts, and to some degree Florida, we saw increased discounting and increased competition. And I think this was some of the pressure that was aided by the slowdown in overall year-over-year cannabis sales. So just to kind of get to the conclusion here, we're starting to see some early signs. I mentioned Michigan and Illinois. The BDSA data that we look at is only through November, and I'm hesitant to say that things have necessarily turned, but they stopped going down. Two months in a row, we've seen stabilization, and the year-over-year growth it's still, you know, negative slightly, but it's definitely better than it was. So I'm optimistic that in the year ahead, between better top-line growth at the state plus other things that are happening, we should see some good growth at the MSOs. So that's what this week's newsletter is about. I want to wish everybody a happy MLK Day, and the markets are closed on Monday in the United States, in case you're not aware, and we'll be back next week. If you like these videos, I know this sounds a little cheesy, but if you subscribe, you'll get them. You'll be notified each week of a new video that summarizes our weekly newsletter. And in the summary of this, there's a link to sign up for 420 Investor if you're looking for guidance, and if you just want to receive our free weekly newsletter each week, you can sign up for that as well. Have a great weekend, everybody. Take care.